How you guys doing? This is Raul de la Vega with your Mortgage Minutes. And I want to go over what I go over with a loan consultation when I sit down for a client for the first time. Now, this is going to be an overview of what I discuss. I go way more in detail on these subjects, but these are the main subjects that I cover. My professional loan consultation takes around 45 minutes. When I sit down with a client, this is the things that I go over. When you deal with somebody online, they're not going to go over all these items for 45 minutes to an hour and do a little bit of Q&A, questions and answers. This is kind of where I start. To get pre-approved, we start, it's really three things. It's cash, credit, income, right? That's all we really need to pre-approve you for a home loan. Cash, credit, income. While that sounds oversimplified, this is where I start with the income part of the process. So I asked the client, is the client self-employed? Is the client part of a corporation? Is the client part of a limited liability company? Or just the client is a regular wage earner with tips, bonuses, or overtime? Any one of those, I have to average those. So I need the W-2s for those. If they're self-employed, I need the taxes for the last 2 years. Or if they're part of a corporation or owners of a corporation, I need the taxes for the last 2 years. Also, I need the tax returns whenever there is investment properties. If they already own a property, I will need a copy of the tax returns. But if you just, let's say you work at Qualcomm or Petco or somewhere, I will just need your last 2 years W-2s and your last 2 pay stubs. So I look at your pay stub to make sure that you're in line to make the same or more than what you made last year. And we also ask for your bank statements. But your bank statements, we look at that in case you're getting Social Security income, income from the Department of Veterans Affairs, or any other income, let's say child support or alimony. So we looked at your bank statements to confirm that you are getting that income. That's about it. Normally, that's what we go over. I go over the income very detailed on everybody that I sit down with. Now, cash, credit, income, right? We just went over income. Now I'm going over cash. Like, hey, do you have any cash in your house, in your safe, under your mattress? I want to know how much you have. And I'm going to tell you to put it in the bank. Because we need to be able to source that money when it comes in when you buy a house. Also, we want to know what you have in savings, what you have in your 401k, what you have in a Roth IRA, or a regular IRA, or a SEP IRA, or a 403b, or a 405c, whatever it may be. Or if you're going to get gift funds from somebody else. And one fifth thing, or sixth thing that I should say is, sometimes you're selling and buying. So we look at, your house being sold. So we get something like a breakdown from an agent of what you will net after all the fees and closing costs when you sell your house, and how much money you'll be able to put as a down payment from those proceeds. So we do verify that with your agent as well. So it's cash, credit, income. So now we're going over credit. So I run the credit when I sit down with you, and I go over every single thing on that report. I don't only look at the FICO scores for all 3 bureaus. I look at how much debt you carry so I can properly calculate your debt to income ratio. I look if you have any short sales in the past. I look at if you had any bankruptcies in the past, any current loan modifications because you were in forbearance or because you had some loan modifications 5 or 6 or 7 years ago. Do you owe any back child support that's in your credit report? Or is there a judgment there from child support? Or is there any alimony that is on there as a judgment from the court? I check for other judgments that may be on there, and I check for collections. Now, this is very much in detail because we need to make sure that when you get pre-approved, you're good to go, and we can close your loan in 19 to 20 days. And we don't want to be dealing with any of this, whether it belongs to you or not, But if it's wrongly reporting on there, we work to get it off before you get an escrow. That way, when you get an escrow, we can close your loan in a quick and expeditious manner. And we also want to make sure that you have the highest FICO score possible so you can get the best rate and the best terms on that loan. So we go over that as well. So we go very deep into your credit, we go very deep into your income, and we go very deep into your assets. And when we sit down with you, it's not to pre-qualify you to say, yes, you qualify or you don't. I don't have two stamps, one that says denied, one that says approved. No, when you sit down with me, it's called a professional loan consultation. I'm giving you information without obligation in hopes that in the future, you may purchase a home with Patriot Home Loans. What is that? What does the future mean? The future may mean 19 days, or it may mean 19 months, or it may mean 2 or 3 or 4 or 5 years. Whenever you make that decision, we want you to be as prepared as possible. And this professional loan consultation gives you the map to get exactly where you want to be in the time frame where you want to be. And it gives you a very realistic expectation of how long it will take you. All right, how much do you pay for rent now? This is something we want to know, because we don't. If you pay $1,400 right now for rent, then you may not be ready for a $4,500 mortgage, right? So we definitely, especially if you haven't saved a lot of money in the past. So we look at lending in 3 ways, right? 1/3 in your mortgage, 1/3 in bills, and 1/3 in savings. So whatever we need to do to help you get there, that's what we're going to do. We want to know how much you're willing to pay for a mortgage payment maximum. That's one of the first things I ask people when I sit down with them. What is the maximum mortgage payment that you are willing to make? I'm not selling you a car. I just want to know that number, because that's going to help me understand where your mind is at. If you pay $1,000 rent and you tell me you want to pay $4,000 mortgage payment, something tells me something's off. Or if you pay $3,000 rent right now and you want a $2,000 mortgage payment, something tells me that's off. So I want to know what that number is. Like, what number is going to make you absolutely nervous if you went over that? And you would be surprised. Sometimes that's a very conservative number for the clients. You know, sometimes they make $10,000 a month and they don't want more than a mortgage payment of $1,800. That's not normal. Normally, you know, the debt to income ratio would be a little higher when you make that kind of income. And sometimes people that make, you know, like $4,000 a month, they want a $3,000 a month mortgage payment, which that's not reasonable as well. So I want to know what you're wanting to pay maximum so I can fight to get you there and see if there's anything that doesn't add up. So that's a question I always ask. It takes people by surprise, because it's almost like, hey, how much you want to pay for this car? What's the maximum you're willing to pay? Which that's not the case, because I'm not selling anything, right? You make your payment by the home value of the house and whatever the interest rate is at that given time. It's that simple. All right, so that covers that. Now, there's 3 different loan types. And this topic, like any of these topics, I go more in depth, you know, maybe 20 minutes. But there's a conventional loan. That's a loan that's not insured by the government. Those loans normally require 3 to 5, all the way up to 20% down payment. There's positives and negatives to conventional loans. In a lot of cases, the interest rates are a little bit higher than loans that are backed by the government, because there's more risk associated to those loans. But the mortgage insurance premium rate in a lot of cases is lower. So normally the difference between a 3.5% down payment conventional loan to an FHA 3.5% conventional loan, there's not that much of a difference in payment. It's just what terms you're willing to take in the difference of those loans. For instance, an FHA loan is a lot more lenient towards a lower credit score than a conventional loan. An FHA loan allows a lot more, the rules and the qualification standards for an FHA loan, in my humble opinion, are lower in many cases than an FHA loan. An FHA loans are lower than a conventional loan, but conventional loans have a lot of upsides too. You can take off, in most cases, the mortgage insurance without having to refinance, and you can keep your low rate. You have a lower mortgage insurance and other things that are positive and negative. So I dive a lot deeper into those topics. And the VA loan, it's a zero money down for a veteran or a current service member, and that is backed by the VA. And I go very deep into that loan program if you qualify for that type of loan. In my particular opinion, that's one of the best loans to get in America. That's the kind of loan I have because I'm a veteran, and if I'm dealing with anybody with that entitlement, I'm always keen in on that particular VA loan program. All right. So as I said, conventional loan normally is going to be around 5% down payment. So your payment would be compiled of principal and interest payment. So whatever you choose as far as a loan amount, at whatever interest rate there is at that time. Normally taxes, an average, okay, each house has a different tax rate. So your taxes can be as high in Hemet, sometimes they're like 2.5%, or sometimes as low here in San Diego in certain parts as 1%. But I would say the national average is more like 1.25%. What does that mean to you? 1.25%. So if you purchased a house that's $600,000, you just multiply it by 1.25%, it's $7,500 a year, which is the equivalent to $625 per month. In that professional loan consultation, I get an idea of where you want to live. And by asking you a lot of questions that I ask, I kind of give you an idea what the tax brackets are for specific houses in those neighborhoods. And I kind of quantify that, or I give you a payment breakdown for a scenario that is feasible in the neighborhood that you're interested in purchasing. Also, you would normally pay anywhere from $50 to $60 in insurance a month, and you would pay mortgage insurance. And that normally an average is with 5% down, 0.65 a month. So how does that translate in dollars? Again, if you bought a $600,000, if you had a loan for $600,000, you would multiply it for 0.65, it would be $3,900 a year, which would be your mortgage insurance would be $325 a month. Again, I go in a lot more detail and I dive very much deeper into these processes, and I give you payment breakdowns. So then I cover about closing costs. Like, what are closing costs? And a lot of people, these are kind of the bulk of it, but a lot of people don't know exactly what it is. And a lot of people called prepaid items, which is your first years of taxes and insurance, and actual fees that somebody's charging you for a loan to buy your house, they lump those two together and they call them closing costs when they're not. So normal closing costs, which are fees that somebody's charging you, these are some of them or most of them. It would be a processing fee, an underwriting fee for an underwriter to underwrite your loan at the bank level and approve you and give, basically pay $600,000 for the house that you're purchasing. Escrow fees, which that is normally chosen by the seller who the escrow company will be. And they have individual fees like document preparation fees or notary fees. There would also be a lender's title insurance. Again, the seller normally chooses who that company is. These are not lender fees. Two of these are lender fees, but the other ones are fees that normally are associated to a home purchase. And I go very much into depth of how much those fees are and how much you should pay for and which ones you can shop for and which ones you can't. So your down payment plus your closing cost equals your cash to close. So I set up a realistic expectation of how much money you'll need in 2 or 3 weeks, and how much money you'll need at closing. Sit down for the professional loan consultation. You have it in writing, and you'll be crystal clear about how much money and when you'll need to make your dream a reality. So we go over total payment of what it would be for the house that you're purchasing. And that's mainly what I cover in the professional loan consultation. After I go over that, I do ask a lot of questions about you and your family and what you want and what your dreams and what you're looking for. I get that information initially, then I do my consultation, and then I open it up for Q&A. The goal is when people leave my office is that they are way more informed than they came in. That they're not confused because I'm giving them too information, and that I keep things simple. Anyway, my name is Raul de la Vega, and this is The Mortgage 22 Minutes. Talk to you later. Peace.